Yeah, hello and welcome to another update video about Quant. Quant follows the pattern that we have on the chart here. We've got this descending triangle on the chart. Basically, you've got two trend lines. You've got this ascending trend line and the 20-day moving average highlighted here in white. And you can see how relevant both of them are. They have been pushing the price down. When the price dropped below it, it basically split the chart in half in this area, and and Quant dropped below it and stayed below it, right? And we then looked at this being possibly a descending triangle. Maybe you can make a wedge out of it. It's a bit unclear yet, right? At the moment, it could also become a wedge. Just be aware of it. But the point I try to make here is that we are below a descending trend line that is pushing us down. We're just about to make a new swing low here, which would all be in line with expectations. As you might know, I bought into a small Quant position a few days ago. This was not necessarily related to the idea that we go up straight away. I did say primary expectation is still that we follow here the wave count further down in a lower wave C, so that the wave C goes lower than the wave A. But I wanted to have a foot in the door because there is a certain probability that we go up from here. I took profits at around 184, so I'm happy to buy in at a lower price anyway, because I believe that Quant is in let's say a higher level uptrend. But of course, short term, we are expected to come down lower as per this wave count. So it was the first position I filled. I wanted to have a foot in the door in case something happens, in case we break the trend line, and in case Quant does what it did before, which is let's say, quite a substantial rally. That we had one here, we had one here, had one here, here, and so on. And Quant can do that very fast, you know, and that's why I always try to scale in these positions, right? So I told you before how I tend to do this. Let me just show you. I do this like this in terms of volume, buying little. Up here I bought at, I think, 165 already now, because I wanted to have a foot in the door after taking profits, but only a small position. And then I buy more, also in terms of volume and bigger positions, as we hit, as we get closer to support, and as we get closer to the key invalidation level. And the whole reason behind this is that you manage risk. Okay, so risk management in terms of being very close to support, having a stop loss set very close to the key support level. And we have already hit the 50% Fibonacci retracement, as you can see here. This is the level where Quant, so the 50% retracement, this is the Quant where, this is the level where Quant also before started to move up after hitting the 50% Fib retracement. So for me, it was a logical decision to start to scale in again, even though I primarily believe it goes down a bit further, because in an ABC pattern, the ideal outcome is that wave C goes below wave A. There are other possibilities, like a truncated zigzag, for example, where the wave C ends above the wave A, but this is a rather rare pattern, doesn't happen very often. And to do that, you know, we need a significant, let's say, bullish catalyst. Now, for example, today, depending on what happens with the Fed data or Fed interest rate decision, maybe we do get some volatility that pushes us out of this descending triangle. I don't know. But it doesn't really make sense to speculate about it because we don't know what the interest rate will be. It makes sense to trade what's in front of us. And primary expectation continues to be that we slide further down. Not necessarily a sign of strength that we do here. We had here an engulfing green candle on the 4-hour chart, but it got rejected at the 20-day moving average and at this descending trend line. So overall, from a pattern point of view, I would see this as a descending triangle. And after the high, which we made here in wave B, we zoom in here, the wave E high of the triangle is basically the wave B high before the wave C was supposed to come down, which it did. If we look at this, you can actually see that we can already count a wave 1 down, 2 up, 3 down, 4 up, 5 down. So this could be the wave 1. Yeah. And then this might have been a wave 2. And we could be now coming down in wave 3 of C, because a wave C is a 5-wave move. So 1, 2. Yeah. Here maybe another 1, 2 setup. And then now the wave 3 down, wave 3 of C, which would normally be the most bearish wave of them. And if this is the case, then we can also calculate a target based on the length of the wave 1 here, the retracement in wave 2, and target for the third wave would be $143.86. That would make sense as well, because it would be very close to the 50-day moving 50-day moving average, which is here around 145 US dollars. So especially the support level here, yeah, which is at $157, going below that would have quite a negative impact. I think then we break support. You know, we've got $157 here, and we've got a swing low here around 159. So 157 is the key support. That's the 50% fib retracement. Going below that will, in my opinion, trigger another sell-off. On the flip side, breaking above the most recent swing high here at 100, and so if we go above that, above $175, that could have a short-term bullish impact. But for that, we need to break out above the descending trend line. Okay, that's my update about Quant. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.